Hey folks, I want to show you this little setup we got going on here. So we've come down, we passed this 4 hour regular trading hour low, and then we came all the way down here. Come on, show me some 4 hour. And we took out this regular trading hour 4 hour low. And we've got a valid breaker right here. The last up close candle before the lowest low is right here. So I've got it marked. Over here on ES, we have a similar situation. This would be our potential breaker right here. We did push through it, and we've gotten above it with a fair value gap that we wicked into, and we've gone and run up this area. Now, is this all the liquidity we want? You can enter a trade right here. You can do that. But remember, when we're looking for a reversal pattern, we want to see it attempt to push back down and fail. And then we know we can get up into this area like right here where we have relative equal highs. We don't just have to go for the lowest hanging fruit. So I would like to see it push all the way back down here, maybe even touch the breaker, maybe even get below here into this area and reject. I want it to go down there and say, no, we want nothing less. We want no more downside today before I would enter a trade. Now, I may be a little more eager. I probably should have entered on that red wick, but I might have been a little bit more eager, but I already made money on the way down. So let me show you where I made the money on the way down. And it was a little bit scary because the 4 hour low was already taken and the pre-market low was already taken, and we ripped back up. But this is our first 1 minute candle, which we took by a tick or two, left the gap, and then we broke through the bottom with a fair value gap that we respected. So I did take a short there. This is the fair value gap I'm talking about right here. You can see how these that wick went to the middle of it, but all these respected it. And then we started offering lower down to here. And so that was a good trade off of the first 1 minute candle. ES had a little different picture that gave a little bit of pause because it went up all the way to settlement. And then its fair value gap, this one on ES, was still well above its first 1 minute candle. But we did finally break below it. But we didn't get a fair value gap below it until right here in this area. So you could enter a short in ES there, but it's also precarious. We just took a 4 hour low. We're at the pre-market low. Are we going lower? Well, that was a big question mark. We did, but we trickled lower. We trickled, and finally did that push down. And so I would think NQ had a much better signal off that first 1 minute candle. Much better. This was kind of torturous to watch. But even once we got that one, we trickled. We did not make a hard push till here. But you can see this was the level it was reaching for. We got there and we reacted. This level, we pushed through it. Didn't much have that much of a reaction. We did rip up pretty good right there. But I was expecting it to go to the low of the opening range candle. We didn't quite make it, but I was expecting it to. So if you got in somewhere around here and your stop is above the low of that opening range candle, then you don't have much to worry about. I mean, you're either going to be right or wrong. You're either going to lose a trade or you're going to make some money on it. Been working real hard on controlling my fear. That's what's. I think I posed the question a while back about how can I get on here, mark out these levels, and say it's highly likely that the market is going to trade down to here or wherever it ends up trading down to. And I can say that with pretty good accuracy, but still lose money. And the answer to that is I've been trading scared. I get into profit and I'm like, I don't want to lose that profit because I need the money, whatever. And so I'd rather lock in the profit instead of letting my winners run. It goes my way a little bit, and then I decide that I need to move my stop to break even, and then I get stopped out at break even, and then the market runs right where I expected it to go, and I miss another trade, and that'll happen day after day after day, and then I'll get frustrated and I'll take unnecessary risk because I'm angry, and end up having a really bad day, all because I did not trust my system enough to let it play out. I didn't trust it enough to leave the risk on. And I don't. I've been listening to this guy. He's got a lot of old videos. He wrote books. Worked with a lot of traders that have that exact same issue. And so if you're having that issue, you're not alone. Um, that is the most difficult part of trading is conquering the emotional side of it. When you've had your butt handed to you so many times, like, oh, I was just up $200. Now I'm stopped out at $200. Why didn't I just take the $200? Well, it's hard to let your winners run in that situation. Um, so I call it like market PTSD, and it really kind of is. So you're having emotional responses to that price moving up and down. Where if you just stick to your trading plan and you're comfortable with the fact that I could lose this trade, even if the setup is 100% perfect, I could still lose the trade. And so, with that knowledge, you don't ever want to bet the farm on any single trade. Get into it knowing that the possibility of you losing it is high. With your setup, it should be a lot lower. But if you're jumping in without your setup, then that's a problem. And so, here, I probably would have been a lot more eager to get in right here had I not already made money because this is the setup I look for. We get above it with a fair value gap. We respect the fair value gap. So jumping in right here, one tick above the high of this candle right here would have been where I would have gotten in normally. And I probably should have, but I was doing something else. I would have taken 8 points drawdown. And even to where we are now, if I just killed it, that's 63 points up to there, 71 points. If we just killed it right in the middle of that range, that's 50 points. It's $100 on one micro. That's pretty good return. But the normal, we don't just run. Normally, we don't just run like that. Normal is we go up in legs and we go down in legs. So I'm looking for that leg. I'm looking for that push back down that fails to go any lower before I'm like, okay, this is definitely the reversal I've been looking for. And then I would take the trade. Um, you know, ES did leave this 4 hour high, and NQ did leave settlement. So if this ends up being a range day, those are targets, definitely. But this little area right here, even on a 15-minute chart, this little area right here is relative equal highs. Let's look at a 15-minute chart there. Yeah. Well, on a 15-minute chart, it's just one little pinprick. The opening range low is right here. So we could just go back up to opening range low or back up to 6,900 or the low here. This is definitely a target. That's a target. That's a target. But I want to see it push down first and say, we want no more downside. Because we still have targets down here we could be aiming for. This could be a losing trade. This was the high of last week up here. I think that's the low of last week. Let's see. That we just took out? No, we didn't take it out. That's the low of last week. So we have not taken the low of last week yet. But on the daily candle, we just took out a daily low right there. That's the low of Friday. So, and it's also a regular trading hour low. So, but we could offer down here. We may not go higher from here. That's why you have to wait for that last push down that fails to go any lower. And I've already made money on here, so I'm not going to take a trade back to the upside unless I see this. All right, folks. I have marked out here now a fair value gap on the 15-minute chart to the downside. And you can see we worked up into it here, but we are respecting it. And so that's creating a little ambiguity as to whether or not we are going to offer higher from here or if we're going to offer lower. Trading back up into this is a possibility. We have a small one up above as well. Just purely reading price action, you can see we have pushed higher and failed to go any higher. But we have not yet made a hard push down and failed to go any lower either. So it's kind of in a land of ambiguity right now. I would like to see it push down here and bounce off of that bullish breaker, which I misspelled. 2 U's, 1 L. That's pretty good. Let's make another L. A bullish breaker there. Bullish breakers are always purple lines. But see, you can see we are making a hard push down. We're making an effort to go lower now. So will we succeed? We don't know. This is the most important leg of any reversal pattern. We need to see it try to push lower and fail and then pull away with a fair value gap. So this one, this little leg right here, we went all the way up here and we pushed down 55 points on NQ. But when we started working our way back up, we have no fair value gap. That's a rule. No fair value gap, no entry. Here we ripped, but we didn't get that push back down. I mean, you could have entered right here and just, I mean, which one would you be aiming at? Maybe the high of that fair value gap, and you could have grabbed a few points. But the real money is going to come if this ends up being our liquidity grab, or this, or even up to here, or even all the way back up to, say, 45 or 25,000, or settlement. That's a big move. And so if we can get a push down to here and a touch of that and a rejection with a fair value gap to the upside, then we have something. We really got something we've seen work many times. And we can trade it. But right now, we don't know. We could go offer to the low of last week. We could go offer down to here. This is kind of looking like a fair value gap is forming. We did work into this one. That looks like a fair value gap to the upside there. We also bounced off the bottom of that. So this is a 1-minute candle. It needs to remain open. It needs to be tested with the next candle and still remain open before we could enter that trade. We just started a new 15-minute candle here. You can see over here on ES. You'll see that oftentimes. When the last 15-minute candle stops, the next one is going to make a move. Will it take that high and keep going? Or will it leave that high and keep pushing lower? Don't know. So this candle's just about to finish. There is a tiny little fair value gap right here that we could say was possibly, no, yeah, it is tiny, but it's there. Just barely even one right there. And that may be where the market's referring, or we may push lower still. So right now we have the fair value gap. This candle is the one that's going to say, are we respecting it? Or are we going to get an immediate rebalance? You can see we're not respecting it. So that one's null and void, at least right now. We may push down in it and just leave a wick, which in that case would be considered we are respecting it. So our fill would be somewhere around there. If we do indeed leave it open. If this candle finishes solid below here or something, then it's no null. Okay, so technically we did respect it to a degree, but because the candle body closed above the center point, but that isn't what I like to see necessarily. Is another candle opening below it with a volume imbalance and pushing lower? No, that's not what I like to see. So I would say right now we still have lower hanging fruit. We're going to go try to grab possibly this wick. Maybe we can get a rejection off of it. When you see these, it's very important that you follow your rules. Don't let your emotions take over and say, yeah, this is it. This is it. I know it is. I'll just put my stop down below there and then we'll be okay. You need to see a failure to go lower and a fair value gap pulling away to the upside. That part has to happen. Sometimes it'll hit this and it won't give you that entry at a fair value gap. Sometimes the second push down to here, it'll just start ripping. So if I start seeing it hit here and then start ripping, I'll just jump in. I don't wait for a fill at a fair value gap necessarily. But I do want to see at least one fair value gap after we take that low. There's also a little volume imbalance there that could come into play. All right, so we've made the push back down. We've gone through the breaker. This is the most important leg of the reversal pattern. One of two things is going to happen. We're going to make a new low and keep on going south, or we're going to make a higher low and start ripping to the upside. So if you're patient and you don't take any trades and you're just waiting and watching, it'll save you some money. To me, right now, my emotions are saying, man, I should have got in a short up there at that high, but I didn't. So I can't really get in now because I'd be getting in at the lows, expecting it to go lower. And that's a bad idea. So right now we're just waiting. Are we going to make a new low? If we do, you could possibly get a break and retest. I wouldn't touch it, not this time of day. Um, the only thing I would be interested in right now is a move to the upside. Just simply because I've already made money here and a push down, I would need to wait for it to get here and then see what happens because I'm not going to sell at the lows, expecting it to go there. So a higher low here and a rip to the upside with a fair value gap. would be my expectation to enter a trade to the upside. And then we could aim for at least this liquidity. But we are respecting that fair value gap to the downside because this could possibly be a directional day to the downside. If it is, I'm going to just let it run. I'm not going to mess with it. And right now, it's definitely looking like it is. You could take a cheap trade here and just mark it in at the lows and pray it goes higher, I guess. It would be pretty cheap. If you jumped in right there, it would be 12 points. So it would be cheap. But why risk money you don't have to risk? What if you got in there, you put in a 12-point stop loss, and the market ripped lower with a 100-point candle or something like that? And instead of you getting just a 12-point loss, you end up getting a 50-point loss or a 100-point loss because of it's going to market fill you. It's not going to fill where you have your stop. So I like this. I like the fact that we did not take those lows. I like the fact that we're pulling away with a fair value gap. But this is also round number. Revisiting round number and then continuing downside is a possibility. So we wait, we watch. Will this stay open? That does have all the signs of a liquidity run. It also looks kind of like a push down that failed to go any lower. Pretty aggressive push down. We'll know if this stays open here in about 46 seconds. So far, it is staying open. It's real nice. But an 80 to 20 rotation is also very, very common. This is still the breaker because it is the lowest point, last up close candle. We did trade all the way through it. I think I'm going to try this one right here. Just going to buy one, a tick above the low of this candle. May not get filled. This may just be a rip. But hopefully I'll get filled. Oftentimes when it does make that higher low, you'll see a pretty good push up. I bet you if I went to a 15-second chart or something like that, we could find a breaker right here that it touched. I'm going to check it just to see. Yeah. If we were at the 15-second chart, the bullish breaker is right here. The low of it is there. And we went lower than that. I think I'm going to put this right at the breaker here, right at those lows. There we go. And I don't need the stop to go any lower than this. If it goes lower than that, then we're in trouble. So that's $62 I'm putting on the risk there. And this would be the 15-second breaker right there on that. This is the breaker we should be looking at. Okay, so lowest points here, 15-second breaker is there. Wouldn't that be crazy if we just went and touched it to the tick? Right there. We got a little lower. But if you look at the whole thing, I think we respected the lower portion of it. The lower portion is at 72, and we did respect it. Anything's possible, I suppose. Definitely made a higher low. Whether we go up from here, it's a crapshoot. This is the whole. Every trade has an element of uncertainty, so you don't ever want to bet the farm on any single trade because you could lose it. 100%, you could lose it. I'm hoping we can trade up to at least the high of this fair value gap, possibly even the candle that created it, which would be here. If you're in the short, you would want your stop there. So basically, I could just do the most recent swing high right here. We got 62 on the risk. That's 169 on the take. It's a possibility. But I'm thinking more than likely I'm going to get stopped out. So I guess it's worth risking $62. Return to round number. Pretty common. No need to panic. Not looking good. Not looking good. We do still have this fair value gap right here that we pulled away with, but we are not making the kind of move I would expect after creating one of these. I would expect it to wick into it and adios. Wonder if we did the old reversion to the mean. That is the low and that is the high, and 50% of that is right here. We have relative equal highs there at 850. That'd be a $293 trade if it went. I guess it's good to take profit as any. It's all pie in the sky right now anyway, because this looks like it's going to go against me. Either way, I feel like this is a good trade. That's one of the things that I was listening to Mark Douglas, and he mentioned whether you win the trade or you lose the trade doesn't really matter. What matters is, did you trade your trading plan? There's always going to be perfect A plus setups that don't work out because that's the market. This is an A plus setup, but it may not work out, and that's okay. I've got 60 freaking $2 risked, but it may also work out fantastically. Reversion to the mean trade, we've made a push up. Maybe we only offer to here. Who knows? But reversion to the mean is a big deal, and we do have relative equal highs that were left there on this 1 minute chart. See how it looks on the 15. I bet it's the high of that candle that created the fair value gap to the downside. It is. And then there's another fair value gap there. So this is a good trade. Either way, win or lose, it's a good trade. And so I just got to let it play out. Do we have a similar confluence going on over here? We pulled away with a fair value gap. It was respected. We made a higher low. Everything looks good, but it could still fail. So you don't want to bet $1 million on a trade that could fail. I could put on one more micro, I suppose. We get another fair value gap to the upside here, which we do have one forming. Could just dance here in a range from now till closing time. So normally, I would have already moved my stop to break even, and I would have been getting stopped out about right now. But I am going to let it take my stop if it wants to. I am not moving it. It's in a good location. It's there for a reason. And that's where the trade would be invalidated. We made a new low. So there's no sense in moving your stop out of fear. There's no sense in grabbing $20. You know you're not going to be happy with it. There's no sense in putting on 50 micros and trying to grab 2 points when you could possibly lose $1,000. All right, so we tried to push down again, and now we're pushing higher. I like this. I might add one. See how we react right here at these little highs right here. Yeah, I'm liking this. See if I can find a good entry for like retesting that would be a good entry. If I could add one right there, I think I would do it. That's going to increase my limit. There we go. Limit by one. I don't think it's going to give me an opportunity to enter. That would increase my stop substantially. If I entered right here, how many points would that be for that set of that one contract? It would be $100 extra on the risk. So I'd be having $162 on the risk. That's pretty good risk. For me, it's nothing for a stepper like you, but for me, it's a lot of risk. I'm going to try it right there. I'm going to try to add one more. I I like the possibility here of the reversion to the mean. A lot of times when it gets on a move like this, half body, half candle bodies is all you can hope for. So now we have a small fair value gap here, and we also have one here that's forming. Going all the way back down to 27 may not happen, but that's okay. I'm not going to chase it. ES is working its way back down there. Yeah, I'm liking this if I can get a fill. Come on, NQ. You're notorious for coloring outside of the lines. Get down there and fill me. Oh, nope. You're not going to fill me. Should I chase it all the way to there? And that would add quite a bit of risk, at least $200 to the risk. Half this candle wick. If I want another one in, I'm going to have to move it up. There's just no way. But no, I don't think I'm going to. I think it's going to run, and I'll just take my one micro profit. But it could hit these wicks and go right back down. Take my $62. I don't like the fact that it's not pushing through here with authority. I think it will, but I'm not convinced enough to add more risk, add more size. You know, there's a lot of things that prop firms do to get you emotional in trading. And one of them is putting this, that would have filled me right there. One of them is putting this money right here. You can change it to ticks or percent, but um, when you see that money, you're thinking, "Oh, I need to lock it in." I might lose $62 now. I'm up 70, so I need to lock that in. Or if you're trading a bigger size, it's like, oh, I'm up $700. Maybe I should lock this in. And maybe you should, who knows? But all of that is designed to get you emotional. And, prop firms make more money on people trying to pass a combine than they do on people who are trading successfully and making money for the company. So it behooves them to keep you in an emotional state so you can lose and rebuy. They got only 3% of traders ever go live with a prop firm and actually trade live money. Only 3%. And if those 3% are making, a couple of $1,000s a day or however much, it pales in comparison to the number of people that are buying resets on a daily basis. So yeah, I'm still liking this. It's a good setup. Still could lose the trade. That almost, I think that would have filled me if I would have left it at the bottom of those wicks. But it would not have filled me if I would have left it at the fair value gap. The smart place to take profit is right here. This is minor buy side. Major buy side, reversion of the mean trade may or may not happen. The aggressiveness of this move up is not impressive. Maybe it'll get impressive here in a minute. I have some of the noisiest birds in my yard. I'm sitting in the house, windows closed, and you can hear them suckers out there chirp, chirp, chirping. All right, so we're getting into the 60s now. That's good. Finally broke out of the 50s for a second, but we did take those wicks right there. So, how much of a pullback are we about to get? I'm kind of losing hope that it's going to even push to those highs. taking back 25% of the day's move right there. Okay, ES is pushing up a little more. Still not an impressive move. Just a slow trickle, slow grind. This is the part of trading, where some people say you've got to be as patient in your profit as you do in your drawdown. Because if you were down on a trade like this and you were down $100 or whatever, and you were just sitting there waiting for it to go your way, you would probably not have much of a problem holding the trade. Most people don't. Most traders don't. They're more comfortable in drawdown and being hopeful than they are in profit and allowing it to go to their take profit. I'm starting to lose patience on this. I want to see it break. I know this level is good. I know 100% this level is good. I'm not 100% sure about this level. Typically, if we do have a pullback, pulling back half of the day, so if you were looking at a daily candle, this would be half of it. I mean, that happens. But still watching this thing dance. So this is where greed and fear both start coming into play. I think this high right here is like a 90% chance we take that high, maybe even that high. This is where I want it to go. But do I err on the side of 90%? Because there's still a good chance it could go here. 70% chance, maybe 80% chance. But here, that's a really good possibility. We could hit there and we could just come back down and just stay in this range all afternoon. But taking the top of that range here, that's pretty likely. And so I am a little concerned that we're going to take it and pop back down. And I kind of want to put my take profit there, not even worry about risking anything. ES is pushing higher, it's kind of leading the way. Nasdaq's going down while it's going up. Looked right in the middle of that fair value gap to the downside on the 15-minute chart again. There's a round number right there. Right here. It's just above those relative equal highs. What if we just aim there? See what a 5-minute chart looks like. This little conglomeration here, I just don't know. That might take too much energy to get through. There used to be a saying, and it'd probably be considered racist now, but people would refer to things that were difficult as a Chinese torture chamber. It probably is considered politically incorrect now, but we'll still use it because it was just an old saying, a Chinese torture chamber. That's what these market conditions feel like to me right now, as a Chinese torture chamber. Um, and I subject, we all of us traders, subject ourselves to it daily. We subject ourselves to this torture of the price just trickling somewhere instead of going our way with authority. I want y'all to put in the comments, should I try for the 50% reversion of the mean trade, or should I just take profit at the most recent swing high and be happy with it? Should I let greed prevail, or should I let probability prevail? I think I should let probability prevail. I think I should let it take that high and see what happens. If it runs through there and it runs through round number and it continues to go up, it actually does put a valiant effort to go higher here. Because right now we're not seeing anything valiant. We're seeing some rough stuff. ES is about to take its high. I think it just did, and it did not pull back. So maybe NQ will do the same thing. Didn't pull back yet. NQ still hasn't taken its high. See, ES, let's look at its 15-minute chart over here. Opening range low is right there. Pre-market low is there. Taking that 15-minute candle high and then ranging here the rest of the day is a very distinct possibility. So this is an inefficiency it needs to trade through, possibly painting that wall. Kind of wish I would have got that addition of one extra micro in there. But maybe it would have made me sweat too bad. So here we pushed. We didn't make it to round number, but we're trying. We filled the fair value gap on ES completely. That's good. An inversion of it, so a pullback to here is quite possible. And then a push higher. All I know for sure is if I kill the trade right now, I'm not getting back in. I'm just going to say that's my money for the day and lock out. See what it does when it gets to round number. It's almost there. ES is not even close to any significant level of round number or anything like that. I have a deal with myself where I always kill it at round number because it usually will go to round number, pull back to 80, maybe lower, maybe all the way to 50, and then pop, maybe go up to 820, back to round number. It just that's just the dance it likes to do. Matt Matt Miller, trades by Matt, he calls it the 80 to 20 rotation. We didn't quite make it to round number, I don't think. 799, not quite a round number. Back to the middle. We're going to invert this 15-minute fair value gap. Alrighty. As soon as this trade pans out, I'm going to do the same. It's looking pretty good so far. There's that 80. 80 to 20 rotation. Maybe we can pop to 20. Does watching this on a 15-minute chart make it any less nerve wracking? I think it does, but that candle's still going up and down. But if you're looking at a 1-minute chart, would that be worse? Oh, this is a 5-minute chart. Oh my gosh, we're reversing 100%. We've got 3 red candles in a row and a bullish order block possibly forming. Breaking a retest. I don't know. We've certainly taken the high of that 15-minute range. Ripping lower is definitely a possibility. We didn't want round number yet. I'm tempted to take it off. See how this candle finishes. $90. Yeah. I like that. Took that high. We did not. If this is an immediate rebalance, I'm out. Immediate rebalance means that this candle would come all the way back down to this low. Liking it so far. Staying above the halfway point of that last candle. That's good. Let's do an 80 to 20 rotation here. Pop, you sorry devil. Give me something to be happy about. There we go. We got round number finally. My goodness. Now we're going to rebalance. Let's do that 80 to 20 rotation we just talked about. That's that 15-minute high that I've got my eye on for ES. And this would be the 15-minute high over here. Is where I have my TP pretty close. Yeah, right there. That's definitely a possibility. We'll be right at 850. Do I get really greedy and try for settlement? I guess it just depends on how quickly it starts moving here. Fair value gap has been filled on NQ. And there's 20. We're going to pull back the round number. We're going to make a new low of the day. ES is still kind of cranking. So taking this high on ES is probably where I'll take this trade off. Hopefully this one will go when this one goes, but you never know with NQ. If y'all ever notice right before it takes a level like that, it'll pull back first. I've noticed because I've gotten in a trade at the highs expecting it to take that level and it pulls back first and I lose the trade. The retail mindset. We're going higher. I just know it. 09, 20, 80 to 20 rotation, and we're going to have another one. We're going to leave that high after taking out that whole fair value gap. Come on. Keep pushing. Minor buy side right there. I kind of have a deal with myself. If I see $200 on one micro, I typically take it. Also, something else I've noticed when we're trying to push back down to round number, 803 is a line in the sand on the downside. This 803 exactly on this candle. If it goes to 803 and starts pushing back up, that's typically a sign that we're going higher. If it goes all the way to 800, it's typically a sign that we're going to push back down to 80. But 803, I don't know why that number stands out, but I've seen it multiple times. All right, so we're taking it here on ES. We just took it. So that's going to be our 80 to 20. Man, I'm tempted to just take it off when we took that right there because it could pull back. I'm going to give it one more candle, one more green candle, hopefully. Give it an opportunity to take out this fair value gap, perhaps. If it'll do that, where's ES reversion to the mean? I didn't even mark it out. So ES, I mean, this thing could go all the way to settlement, but I'm not going to press my luck. ES reversion to the mean is right above this next candle right there. Now, 6680 is a psych level for NQ. I mean, for ES. See how that one's coming back down? I don't like that. I don't like that at all. As long as we don't make a new low. We didn't even take those highs on that push up. So yeah, I'm not liking that. And see, now we're below the 803. So it's going to go back down to 80 at least. I'm out. Maybe. 86, 87. Yeah, I'm gonna take it off. I may have left money on the table, but I made some, and that's important. I already had some money on the day. I added to it. I feel like I was very patient on that trade. I waited until I saw exactly what I wanted to see. This really, that one down here is really not consequential, but it will most likely go to this level. That's what I'm thinking. But I just don't want to endure a pullback to half of the, because if we pull back, we can pull back half of this run right here, half of that run. So right here, maybe very, very common to do. And I just don't want to sit here and watch it do that. So I think the money I made is good enough. If I was trading bigger size, then I would have made more. But right now, it's about the fundamentals, trying to keep my emotions out of it. When I put on more size, my emotions get involved too much. And so this was a good trade, in my opinion. It puts me up a little over 600 on the day, and that's a good day. If I was out Ubering, I know I wouldn't make 600 bucks, not even close. So keep that in mind whenever you're taking your trades. Your mind really can't wrap around the idea of making $1,000 in a day or $1,000 in a trade, or losing that much either. You're going to become emotional with your trading if you're trading that much size. And right now, it's about learning the fundamentals and then just executing your trade based on process, not on how much money you can make. The money will come eventually if you just focus on the process. So that's a good trade, good setup. We pushed higher, left liquidity, came back down, made a higher low, pulled away with a fair value gap. And that's it. That's exactly the way you trade this system. It's very, very tempting to try to get in, try to guess where we're going when we're in a big mess like that. And when it pushed down, it's very tempting to say, okay, man, we are just absolutely, we don't want to go any higher here. And that's why it's very important that you look for this higher low with or without the breaker confirmation, higher low, and a pull